Good morning, hello and welcome. You are with us on Trading Hour. It is the start of a brand new weekend. The bulls are still very much in control. The short point is that all dips are getting bought. There's a lot of buoyancy in the mid-cap market, and the Nifty very comfortable around that 23,000 mark all over again. Hi, Reema. I just wanted to point out that the strength today is really the banks. That's where it's coming in from. And on the Nifty, you'll see that. Let's just pull up the Bank Nifty and the Bank Nifty gainers as well. The gain almost is now 0.7%. So about 0.75% of a gain on the Bank Nifty. And it's continuing to push along, and it's got lots of legs. It's not just, that one odd HDFC Bank, lots of other names, IndusInd Bank, Kotak Mahindra Bank, ICICI Bank. So it's a very well-rounded Bank Nifty rally. And finally, let me just point out some of the mid-cap winners as well. Today is a day of very interesting result reactions, and we'll talk about these stocks as we go along. Look at Astra Micro, Paras Defense. We'll be speaking with Nazara. Nazara's stock has really picked up momentum as well. Though the top line is, you can say it's a little disappointing, but we'll get to more of it in just a bit. And even something like Ashok Leyland, where there was a top line miss, but the management commentary was strong. We spoke to the management in the, in the earlier part of the morning, and even that stock's picked up. So I guess the mood is overall quite buoyant, Reema.
Oh no, absolutely. And it's HDFC Bank, right? So while the other banks, the private sector banks like ICICI Bank, Kotak Mahindra Bank are in the green, but a bulk of the heavy lifting is done by HDFC Bank, as that contribution chart will tell you. And this is the third consecutive day of gains for HDFC Bank. Ever since that Nifty breached the 23,000 mark and we had the big breakout session, since then, HDFC Bank has been very, very strong. And in the last 3 days, it's added on close to about 5.5%. So that's where, a bulk of the gains are coming through. And even as the index is consolidating after last week's stupendous rally and the Nifty is at 23,000, look at the way the mid-caps are rallying. The mid-cap index has hit a new high. It's a 0.7% gain on the mid-cap index, though the advanced decline ratio is in favor of the losing side. It's a bit surprising considering the green that you are seeing on the mid-cap index. But as you can see, the advanced decline ratio, at least right now, has more stocks losing compared to gains. But let's get to the big stocks which are on the move at 11 o'clock. And Divi's Laboratory is the top Nifty gain. A very strong set of numbers, strong margin expansion. The guidance is looking good. Ekta joins in with the details. Ekta.
Thanks for that. Well, yes, for Divi's Labs, one of the key things that really stood out for Divi's was basically the margin picture this time, where it improved to a multi-quarter high, the best that we've seen in 5 quarters for Divi's Labs when it came to margins at around 31.7%. Now, the commentary from the management also enthused the street. They are estimating long-term double-digit growth. The growth is going to be aided by long-term supply agreements with one of their innovator companies. This is on a longer-term basis. And Divi's is also mulling entering the market for basic amino acids that are key starting materials for GLP-1 drugs. So that's not going to be a huge opportunity for Divi's, but nonetheless, it is important that they're entering into that space. 2 molecules are going off patent, which would provide a business opportunity in FY25. 7 molecules over the next 5 years will provide a business opportunity, according to the company. CapEx 1,500 crores, cash 3,200 odd crores on the books. Kotak retains a sell, target price 3,250. Goldman Sachs neutral, target price 4,020. And Jefferies hold, they've raised their target price to 4,050. Elara sell, and they have a target price of a little over 3,000 odd rupees. Valuations, however, despite the stock having run up today, still look very expensive. 52 times on an FY25 basis and 42 times plus on an FY26 basis.
Okay, that's Divi's. We have more stocks to discuss because pharma is really the sector of the day, Ekta. Let's move to Glenmark as well. I mean, how is the street reacting to those numbers?
Well, yes, Glenmark is reacting to what is a positive outlook from the company. So revenue growth of around 10 to 11% on a consolidated basis is what they've targeted. EBITDA margins estimated at 19%. They're targeting double-digit profit growth as well. R&D expense should be between 7 to 7.25%. Rialtis in Europe is doing well as per the company. They're estimating sales of over 80 million from Rialtis this year. They're requesting the US FDA for a meeting and inspection when it comes to Monroe. And FY26 will be a big year for the company in terms of overall growth.
Okay, and not done just yet. Torrent Pharma is also buzzing in trade. Ekta, how are the numbers looking?
Well, Torrent Pharma, good numbers. And what really stood out is what the company has also told investors. They estimate domestic growth to be 200 to 300 basis points higher than the Indian pharma market. US should contribute positively to top line plus bottom line in FY25. They estimate 15% growth in Brazil, estimate high single-digit growth in Germany, and a potential to improve margins by 50 to 100 basis points every year. So that's the outlook coming in. Brokerages, Kotak maintains a reduce, Antique maintains a buy. They say it's their top pick in the sector. Jefferies has a buy. Nomura has a buy with a target price of 2975. So seems to be a bullish call from most brokerages.
Okay, all right, got that. Thank you very much, Ekta, for the pharma wrap-up. It's really lots of green on the pharma screen as all of these companies report their numbers. Let's move on. More earnings analysis then. NTPC obviously in focus as well. Stock's not doing too much. It's quite flat this Monday morning. Numbers came out over the weekend. Vivek is here with the details. How do they look, Vivek?
Well, our stock's not doing too much. It's had a stellar rally though and seeing a bit of cool off, a bit of profit booking. Now, actually, when you talk about NTPC, especially when it comes to the utility space, what actually happens is that quarterly results are largely reflective of the guidance that the company has given, number one, in terms of capex, and number two, in terms of the capitalization. Now, when you talk about the results themselves, let's have a look at the results. Largely operationally in line, but we look at the commentary and that's something that's quite important to track. So revenues high by almost 7.6% on a year-on-year basis, 47,622. EBITDA high by almost 19% on a year-on-year basis. Margins coming in quite strong, 29.8%, and profitability high by almost 27% on a year-on-year basis. Now let's look at the conference call. Some very important takeaways coming in from there. Number one, the company is targeting new thermal orders of almost 15.2 gigawatts in the coming years. That's quite a strong number that the company has given. Number two, for award of ordering pipeline as far as thermal activity is concerned, has been expedited to 10.4 gigawatt in FY25. What was the earlier figure? The street was working with a figure of close to 4 gigawatt. So more than double is what the awarding activity will be. So which is a very positive read through as far as capital goods companies like BHEL are concerned. Number three, the most important and which has been the biggest puzzling factor as far as NTPC is concerned is when will the company go ahead and raise money as far as the renewable arm is concerned. So the company has given a timeline this time around. October to November of this particular year is when the company expects to list the renewable energy platform. Now, talking about the thermal power guidance for commissioning, 2.8 gigawatt commissioning expected in FY25, 1.5 gigawatt commissioning expected in 2026. Now, apart from that, the company is also targeting 7 gigawatt of PSP, so pump storage capacity addition over the next few years. So, inline operationally, largely inline set of numbers, seeing a bit of profit booking, but a lot of positive takeaways as far as the conference call is concerned.
Okay, but the stock has corrected a bit after hitting those record high levels in the morning. Is this the first time the company has given a timeline on the renewable power business listing, Vivek?
Well, Rima, actually what happened was earlier the company was working with, they had given the street two options in which they would go ahead and unlock value. The first option was they said that they'd probably look at selling a stake. Secondly, the company said that by the end of FY23 that they would go ahead and list the renewable power business. So FY23 passed away, FY24 again, nothing happened, but now there's a fresh definitive timeline that the company is working with. And along with that, right now there are more assets also as far as the renewable energy platform is concerned. So hopefully this time around that should list and that should unlock value as far as NTPC is concerned.
Renewed push for the renewable business. Thank you very much, Vivek, for joining in. But the stock is down 1.5%. Get into a break. We'll come back and discuss commodities. Manisha Gupta will join in as always. Welcome back. There is a cyclone which has made a landfall in Bengal, but in other parts of India, the heat wave continues and continues to be very, very oppressive. For a quick check on what's happening on the weather front, Manisha is now joining in. Hi, Manisha.
Well, hi. Thank you for that, Rima. Well, yes, as you said, there is a heat wave forecast that the IMD has put out yet again, and this continues for the next 3 days as well, at least until 29th. And this is for Delhi for the next 3 days, where there is an alert as well. Remember, various parts of Delhi have hit temperatures as high as 48 degrees, and we've seen almost 50 happen in Falodi in Rajasthan and various other parts as well. So that alert just about continues until 29th. But as you rightly said, we have seen Rimal downslide. lead to various areas in East especially and West Bengal see heavy rains. In Tripura, Mizoram, Manipur, etc. also there are heavy rain alerts that the IMD has put out. But apart from that as well, there's heavy rain alerts happening also in Kerala, Andhra Pradesh and Karnataka as well. More interestingly is the progress of monsoon, where we do know that it has covered now the Bay of Bengal and most parts of Andaman and Nicobar as well. And the onset of monsoon in Kerala is anticipated on 31st of May, plus minus 4 days of error margin is what the IMD has put there. Also giving further dates, IMD says that by 6th and 7th of June, you could see Karnataka seeing onset of monsoon. Mumbai would see it around 10th or 11th of June. Most importantly, it also is about IMD suggesting, they have a press conference, by the way, at 4 p.m. today in the evening, and they're suggesting that they would be giving out a geographical and a month-wise onset in sense of monsoon and distribution in the evening today. So that is something that the street will watch out for.
Well, Manisha, I can tell you just the sight of some clouds over Mumbai, that was enough to inspire hope in the morning. But we'll probably have more statistical data points and evidence in that IMD press conference later in the evening. Thank you very much for putting that on the radar as well. So we'll, of course, look out for that. But we do have to take a very quick break, come back on the other side and get some management conversations going on Q4 and beyond. The management of Nazara Technologies is going to be joining in. They're talking a lot about getting aggressive on the M&A side this year. We'll get more details with Nitish Mittersen.
Welcome back. Let's get the first corporate conversation going on Trading Hour, and that's Nazara Technology in the back of the Q4 numbers. The stock started with a downtick of close to about 2%, but now is up 3%. Lots happening. First, there was a revenue decline of about 8% on a year-on-year basis. But the margins of the company have expanded on a year-on-year basis, and EBITDA margins now stand at close to about 11%. Bulk of the growth has come in the esports business. And the company is talking about growth and margins accelerating in FY25 and perhaps in M&A as well, as the M&A pipeline looks fairly robust. In another development today, the promoter has sold 6.4% stake. So to discuss all this, we have with us Nitish Mittersen, Joint MD and CEO of Nazara Tech, to take a few questions. Nitish, morning. This is Rima here. First, talk about this block deal. You've sold a 6.4% stake to an existing investor, Plutus Wealth Management. Why is that? With this, what does your stake come down to, the entire promoter holding? And do you have plans to offload further stake?
Sure. So as you would know, the promoter family has been nurturing and running this business for the last 25 years. And we believe that some liquidity for the promoter family was important. And that's the reason we did this transaction. I think what we're very happy to see is that Plutus Wealth, who has been an investor with us since the pre-IPO days and has also participated in many of the preferential placements that we did, including the last one, has shown tremendous confidence in the company, its promoters, and the management by acquiring this additional stake. And I think that makes us very happy that our investors are showing very strong confidence in us. The promoter stake will be about a little bit over 10% after this transaction.
And any more plans to bring in liquidity for the promoter family? And has the entire stake been bought by Plutus?
No plans to do any other stake sale at this point of time. And yes, it's been a block deal with Plutus.
Okay, let's get to your business then. First, if you could explain the decline in your top line, 8%. We've never seen Nazara Tech's revenues decline. So what happened this quarter? And what can you guide for FY25 on the top line?
I think there were 2-3 reasons causing this decline. One is we continue to see a denominator effect of the DataWorks client loss that we had done. Because last year we had a large revenue contribution from that particular client in this Q4 period, which was absent at this point of time, although it didn't impact margins much, because if you remember, that was a very low margin client for us. The other thing is the way the revenues of the open play business, because of the new GST policy, the way the revenues are being stated on a net basis of GST actually show much lower revenues compared to the actual state of the business. And therefore, we are counting lower revenues. We are quite okay with that. We are quite okay with that because for us, as Nazara, the quality of revenues matter more than revenue growth at all costs. And we think the underlying foundation of the business is very strong, which is shown by our operating cash flow. This time, our operating cash flow has actually exceeded our EBITDA. That allows us to redeploy this cash into organic and inorganic opportunities. We believe going forward, the revenue growth will pick up quite strongly.
Nitish, hi. Good morning. Surabhi here. Just a couple of questions. First, let me just, since you brought up GST, let me get that out of the way. And then we want to talk about top line and all the restructuring and M&A that you're talking about. But on GST, because I thought that GST was an issue only for the real money gaming part of the business, which was very small, right? I remember you telling us over the course of the year that that's just about 3-4% of the total top line. So then what is this GST change, which you're saying impacted the top line?
Yes, I mean, it contributed to the decline in top line, not all of it. So 4% would become 2% in terms of how it is reported. Because our GST earlier was about 17-18% of our RMG business, which is now gone up to about 50% of that business. And we report on the net revenue, net of GST.
Okay. So how much is RMG now? Okay, I think we've just lost that feed.
Nitish, can you hear us?
I think we've just lost that feed with Nitish. We'll try and get him back in a bit. But in the meantime, Rima, there's a lot going on with the company, right? Because real money gaming is one aspect, it's a very small part of it. But otherwise, it seems that they're looking at a lot of restructuring as well.
Yes, so that's what the company has said in their press release, that we're restructuring our corporate framework by either closing or merging entities that don't align with our vision, including Hala Play, Nazara Bangladesh, Mobile in Nigeria. They basically had a telecom vertical, which perhaps they're looking to scale down. Additionally, we are in the process of divesting Nazara Kenya, Pro, Crimson, Sports Utility. And so there is a lot of corporate restructuring, and they're looking at, not delisting, but exiting certain businesses. But
yeah, I think we've got Nitish back. So Nitish, just to go back to that point, can you just complete the point on real money gaming and what's the outlook? I mean, now that GST is here, maybe it's here to stay. What do you expect from that business? And then let's talk about all the restructuring, the divestments that Rima was just referring to, and the fact that you want to look at more inorganic growth. So just give us the whole strategy blueprint for the current year.
So the GST going forward is quite clear, and the business has absorbed it, is stable, has broken even, and now we're looking on how we can grow back the business. And we will continue to now positively look at M&A in that RMG space. And we are in conversations with a couple of larger players to see what can be done. In terms of restructuring, I think we looked at FY24 as creating a very strong foundation for future growth. We raised a good amount of capital. I think as a group, we raised INR 950 crores, which increased our cash balance to close to INR 1,450 crores. Puts us in a fantastic position to grow organically as well as invest in value-accretive acquisitions. We are looking at gaming companies, core gaming studios to buy. We are in due diligence phase with at least 3 or 4 of them and expect to get at least one over the finish line in Q2 of this year. So I think a lot of interesting opportunities ahead for us.
You spoke about, on the subject of margins, there is an impairment charge of 25 crore that the company has taken this quarter. Could you explain that for us?
Yes, it is our Hala Play business, which was in the fantasy sports space. I think we did very well actually to withdraw from that business in good time, because if we hadn't, we would have ended up burning a lot more cash trying to grow that business and then hit a roadblock with the GST in October. So I think it was a very good call taken by us in the last year or two. And now with this whole GST situation, we decided that the business was not worth building out. And from the intent of keeping a very clean balance sheet, we decided to write it off or to impair it.
Okay. Are there any more impairment charges for businesses which don't make sense for you? And Hala Play, you've completely written it off now?
Yes, Hala Play has been written off completely.
Okay. And for the other businesses, is there any, should the investors expect further impairment charges?
You see, as a M&A-driven business, impairment gets tested every year. At this point of time, our auditors have done diligence across all our businesses and only found this to be requiring to be impaired.
Nitish, just to go back to real money gaming, and you said you're open to M&A opportunities. That's one area you're looking at. What's the thinking? I mean, do you think the market has digested 28% GST fairly well? Clearly, you still see opportunity. That's why you're thinking of M&A over there. What kind of company, what kind of size, and how much of your revenue do you think RMG can scale up to?
I think
as a percentage.
I think what is important is there is clarity. We've all along said that we need clarity. It's, of course, the GST can be less or can be more. That's a different topic of discussion for another day. But I think as long as clarity is there, we believe that this business can grow in a responsible manner, and Nazara can play a part in it. In terms of targets, we would look at acquiring businesses that are top one, top two in their space, that are market leaders and can create a large growth opportunity for us. In terms of share of this, RMG could potentially go to 20-30% of our revenues over the next 2-3 years, provided we get the right target that we require.
Okay, that's very interesting. So perhaps potential to go up to 20 to 30% of your business over the next couple of years. Got that. Let's talk about the other segment. I mean, sports has done pretty well for you, and there also, I think you're extending your stake in an entity. I believe Next Wave, right? So just take us through what's happening with sports. That's been the fastest growth engine in FY24. What lies ahead in FY25, and the kind of investments you'll make, either organic or more M&A there. Again, give us some clues as to what categories, what are you looking at?
Sure. Our sports entertainment space is doing very well. Like you said, it comprises of Nodwin Gaming, which is the leading esports company in India with over 80% market share. There's a lot of activity happening there, both on the organic and M&A side. And we think FY25 will be a faster growth for them as compared to even FY24. In terms of the other sports segments, Sportskeeda has continued to outperform for us, doing extremely well in the US. They've acquired an entity last year called Pro Football Network, which has doubled in revenues and increased profitability. So there's a playbook that has got established there. We will try and do more of that this year. And the entity you spoke about, Next Wave Multimedia, we are acquiring 100% stake in that company with an intent to potentially merge it into the parent entity and bring home this very popular franchise, the World Cricket Championship, which I think we can do a lot more with going forward. So yeah, a lot of activity happening on that segment. We will continue to invest organically, but also continue to look at inorganic acquisitions in all these three businesses.
Okay. You're guiding for accelerated revenue and EBITDA growth in FY25. What's the number we're looking at? Double digit, back to double digit on the top line?
Yes, definitely.
Okay.
We should grow. We expect the growth to really come in from Q2 of this year, but we should see healthy growth in top line and healthy growth in bottom line.
So double digit FY25 revenue growth picking up from Q2. So Q1 is going to be soft for you.
We'll see how it pans out, but at least I have more tangible view on Q2 onwards growth.
And why do you think Q1 you don't have the visibility or you're not confident about growth?
We have many of the initiatives we've taken, are still playing out, and will start kicking in revenues from Q2.
Okay. And a quick word on margins. How much do you think you'll be able to expand margins, given all the initiatives?
I think we'd like to see a similar expansion as last year. So at least 100 bips, if not more.
Got it. Thank you, Nitish, for joining in, and wish you all the very best. That's Nazara Tech. The stock is up 3.5%. Get into a short break. Before that, here is a quick and small programming note for all our viewers. Join us live on 31st of May from 5:30 p.m. onwards for CNBC-TV18 Future Female Forward, the Leadership Circle, a transformative platform where leaders from diverse fields will venture beyond the traditional discourse and share stories of grit and determination and roads less traveled. This leadership circle is not just about business strategies and professional accolades. It's about delving into the depths of the personal journeys of these trailblazers. Welcome back. Apple is reacting to a good set of numbers. The stock is up 4%. The company's reported a revenue growth of 42%, stable margins, and a profit growth of about 40%. So very steady and strong Q4. And margins for the company have been very, very steady over the last many quarters, hovering between 19 and 20%. The company, in a conference call, has also guided for 20% plus top line and profitability growth going forward. This is a company which is an ad tech player. So it's a big beneficiary of increasing ad spends on mobile in India and in emerging markets. So it's got that tailwind behind it. But year to date, Affle India has been an underperformer. The stock is down 2%. And that's because, one, the India business was hit on account of real money gaming in the last 2 quarters. And even the developed market growth had slowed down, which is why Affle had underperformed. But now it appears those clouds are clearing and the company is clocked in a very strong Q4. And brokerages are bullish. Both Ambit and Elara have a buy call on the stock, and it's trading at about 35 times forward multiple. But let's get to Astra Micro.
Absolutely, and Astra Micro is doing very well in trade, surging almost 10-11% after reporting its fourth quarter numbers. Let's go across to Upasna to find out what's worked so well. Upasna, tell us more.
While the company has reported a strong set of numbers in Q4 FY24, the revenue saw an uptick of almost 37% on a YoY basis, and margins also expanded sharply from 12.8% to as high as 24% on a YoY basis. While the margin expansion was mainly due to change in product mix, as the revenue contribution in defense has decreased from 72% to 58% sequentially, while space revenue contribution has increased relatively from 6% to as high as 14% on a quarter-on-quarter basis. While company's PAT also increased 3 times on a YoY basis and stood at 54.4 crores, and company's order book also stands strong at 1956 crores with an uptick of almost 27% on a YoY basis. While company has also highlighted that its JV has turned positive for the first time in FY24. So all in all, we are seeing a strong set of numbers coming in from Astra Microwave Products.
Okay, got that. Thanks, Upasna, very much for the details on Astra. Now, Sun TV is not having such a bright morning. Company reported fourth quarter numbers and they seem to be a miss. Vamakshi has more details. Vamakshi, so what's the issue here?
Well, absolutely not looking bright. And in fact, when we look at the numbers, revenue has come in nearly 4% versus the limited estimates on the streets. But it is a miss as far as EBITDA, margins as well as profit is concerned. Revenue did see an uptick of almost 14% on a YoY basis. But it is important to know that most of this growth is largely being led by their cricket franchise income. In fact, Motilal Oswal says that adjusted for this cricket revenue, the total revenues have inched up only by 2% on a YoY basis. And this could be mainly on account of weak ad revenue. The EBITDA margin too has seen a dip of almost 510 basis points on a YoY basis, and this is largely being led by higher operating expenses. Operating expenses inched up by almost 23%. Cricket franchise fees also saw an uptick of 117%, and other expenses also saw an uptick of almost 41%. The net profit has come in at 400 crores for the company. This is an uptick of 9% on a YoY basis, but in fact it is a miss as far as the street is concerned. We have a couple of notes coming in from brokerages as well. Kotak highlights that the core business has disappointed. A weak quarter was reported both on absolute as well as relative basis. The ad revenue has seen a decline of almost 2.5% in the fourth quarter, and this is likely due to some market share loss in their opinion. But nevertheless, they believe that the stock offers value even after factoring in structural risk. But given the recent run-up, they've gone ahead and downgraded their rating on this counter to add from buy, and they've revised the target price to 740 as compared to 725 earlier. Motilal Oswal believes that the company has a conservative approach towards investments in OTT, and this in turn poses a key risk within the rapidly growing space. They broadly retain their estimates. They're factoring in a gradual recovery in ad revenue, continued momentum in the subscription revenue on account of NTO 3.0, as well as higher IPL revenue in FY25 owing to the team's performance. They're expecting revenue and EBITDA CAGR of 7% each over FY24 to 26. They've reiterated their buy rating and target price of 790 rupees per share. But the company has reported a weak set of numbers this time around, and as a result, the stock is tanking in the trading session today.
Thank you very much for explaining that. Let's get to the market technicals. Vinay Rajani from HDFC Securities is with us now. Thank you very much for joining in. Steady for the markets, holding 23,000, but there is buoyancy in the mid-cap and in the banking space. How would you assess today's trading session and your calls, stock calls?
So for last 2 trading sessions, Nifty has been consolidating after giving a breakout of 22,800 was a resistance, and from that 1,000-point range we saw a breakout in last week. And now two trading sessions we have seen some consolidation, but overall trend is positive. On dips one should buy, and 22,900 is a strong support we can say for the time being. And on dips, in intraday dips, one can go long in Nifty around 22,900 to 950 odd levels. 22,870 should be the stop loss in the trading long position, and on the upside I see a target of 23,150. So on dips I am recommending to go long. As of now, one should wait for the intraday dip. As far as Bank Nifty is concerned, yes, it has started outperforming for last 3 trading session and has got some momentum back. But after 3 days of consecutive rise, it might happen that it can give running correction. So on dips, I would recommend going long in Bank Nifty. So 49,000 is a level to watch out for going creating a fresh long position. 48,700, I would recommend a trading stop loss, and on the upside 49,500 should be the target. So overall buy on dip should be the view for Nifty and Bank Nifty, and primary trend is positive for the markets. And a stock specific, I'm bullish on Ultratech. This was also recommended on 24th May on CNBC channel only. So I am reiterating buy on Ultratech Cement as a trading call. So one can go long in May future around 10,260, 270 odd level. Stop loss can be kept at 10,100. On the upside, I see a target of 10,600. The second pick I would choose is from the IT space. So after a long time, we have seen that IT is getting momentum, and LTI Mindtree, which was oversold on the charts, now started getting momentum back. So LTI Mindtree can be traded long. May futures, one can initiate long positions around 4889, 4890 is the level around which one can create long positions. 4800 should be the stop loss in long position in May future, and on the upside I'm expecting a target of 5030 in a couple of sessions. So I would recommend going long in Ultratech Cement May future and LTI Mindtree May future for 1 or 2 session time period.
Okay, all right, got that. Thank you very much for your trading calls today. Appreciate you being with us on the show and giving us those views. We need to take a quick break on that note, come back on the other side, and we'll chat with the IndiGrid. The InvIT has come out with its quarterly performance. We'll find out what the optimistic trends sound like for FY25. Harsha, CEO, will join in. Welcome back. Well, IndiGrid is the next entity on our radar, and we're looking at the fourth quarter performance plus the outlook, of course, of the InvIT and what lies ahead. Now, in FY24, the company met its guidance in terms of the dividend payout. The total dividend payout was just over 14 rupees per unit. And IndiGrid has eyed for a DPU of 15 rupees for the current financial year. Let's take the discussion forward with Harsha, CEO of the company. Harsh, thank you very much for joining in and taking this call. So let's start from that guidance number. I mean, where's the confidence coming in from that you'll perhaps reach that 15 mark in the current year? Tell us about the projects that are contributing, the plans that you may have of adding more assets. How's it looking?
So the plan is looking pretty good, and last year has been fantastic for us. We not only acquired almost 900 megawatt of solar assets, we also participated in greenfield bids, and we have won 5 projects in all about 2,000 odd crores. So this year's growth of 15 rupees a unit that we are indicating towards is largely on account of the acquisitions that we have done over last year on solar side, and subsequent growth coming from the transmission and battery storage bid that we have won, which will allow us to carry forward this growth in the subsequent years.
Harsh, morning. Can you talk to us about your inorganic growth ambitions for FY25?
See, we don't differentiate between inorganic and organic growth. We keep evaluating opportunities on transmission, battery storage, and solar projects on both organic and inorganic side. On an organic side, the advantage is when we acquire, when we build the asset, we are able to focus on quality control, and the entire development premium also accrues to IndiGrid. On an organic side, we are purchasing after the completion of the project. So we are dependent on different competitive bidding processes, which eventually results in. However, the inorganic one directly adds to our DPU as it did in FY24. So, I mean, we are neutral between both, but we keep evaluating both very actively. And at this point in time, we see a tremendous amount of pipeline in the sector on especially the organic side, which is the development side of the business. We are seeing unprecedented pipeline on transmission, battery storage, and solar.
I have targeted capacity in mind?
We don't have a particular targeted capacity in mind for renewable, especially. We keep guiding that approximately 25% of our assets may be in renewables, but we'll remain majorly focused on transmission as a business. And on transmission side, we have unlimited appetite as long as it comes at a reasonable returns.
Okay. Got it. Speaking of renewables, can you give us an update on Virescent? I guess that was one of the major acquisitions that you did last year, right? So how are the metrics looking and what are you expecting from this asset in FY25?
So Virescent, we acquired last year and merged with the Indicate portfolio. It's already merged completely, including people, processes, all of it is merged with us. And this quarter is the first quarter or the second quarter when entire Virescent is contributing on Indicate's quarterly results. And then it's pretty much in line with what we had expected the assets to perform. And then we are pretty happy with that acquisition. Subsequently, we acquired Renew, approximately 300 megawatts of asset in Q4, which has only about 40 days of operation in this quarter, which will yield full quarter results in the next quarter.
Okay. So I know you can't give us very specific numbers, but in terms of just, let's say capacity, whether it's renewable or any other asset that you're looking at, in terms of the number of gigawatts you're looking to acquire this year, is there a ballpark estimate that you can share with us?
Our grid business is not based on gigawatts. It's based on kilometers or MVA capacity that we can talk about. But give or take, let's say we in our inorganic or other organic pipeline where we are developing the business, we are already developing about 500 megawatt hours of battery storage capacity. And then we are looking to do another 500 if possible. So it will take us to around a gigawatt hour of battery capacity in India over the next couple of years. So I think on the greenfield side, on the battery side, we already have approximately 400 megawatt hours, and we are looking to grow it to a gigawatt hour of capacity.
Okay, so just a related question there. Can you give us, a breakdown of the asset mix right now between, say, battery storage, which seems to be a very big focus area for you, renewables, etc. If you could just break down the portfolio in terms of its profile.
Yeah. So at this point in time, transmission is approximately 77% of our portfolio and 23% is renewable. Battery storage, we have just one. But in our classification, battery storage qualifies as part of transmission as Ministry of Power's classification of battery storage, depending on where it is stationed. Our battery storage are stationed in the grid utilities, so they are classified as part of the transmission assets. At this point in time, these are pipeline. We are building it, so that it's not part of the AUM. So pure play transmission is approximately 77%, and renewable is approximately 23%.
Got that. Just quick final question, Harsh, on these project financing norms that everybody in the industry is talking about, right? Still draft norms. It seems bankers are trying to sort of push back and express to the RBI their thoughts around it. But what are you hearing, or what are you sort of anticipating? Could there be a slowdown till this finally resolves?
So first, I think InvITs are not covered in this because we don't do project finance. Our financing is at an InvIT level, and we are largely capital markets, so we're not impacted directly from this. However, as a sector, I do feel it's extremely detrimental to infrastructure sector and infrastructure financing. It's like one step forward and 3 steps backward, not 2. And I hope, I think this is just a consultation paper. Industry participants are giving substantial amount of feedback to RBI and also government. So we're hoping that it will be reversed.
We'll see how this plays out. As of now, it's a draft paper. Thank you, Harsh, for joining in. Get into a break. On the other side, we'll talk markets. We'll invite Madan Gopal Ramu from Sundaram Alternate Assets. Stay tuned. Welcome back. After a record-setting week last week, the markets are consolidating but holding on to that 23,000 mark, and it started inching up. So when we started the show at 11, we were at 23,000, and now we've added on close to about 18 points. The action in the mid-cap space continues. The mid-cap index is still up close to about 0.7%. Some of these IT stocks are seeing, gaining ground. So Infosys, LTI, Mindtree are some of the stocks where those incremental gains have come through. Madan Gopal Ramu, fund manager and head of equities at Sundaram Alternate Assets, is now joining in. Madanlal, it's the last leg of what's been a long, dramatic, election voting period. We're at the crucial juncture now, and lots of scenarios are being built in the market. But how would you position your portfolio broadly now in anticipation of the verdict?
Yeah, hi, thank you. I think the narrative of the government coming back and the investment narrative that has been going on, I think that has gone to a next level at this point of time. We feel that a lot of the growth potential, and it will continue, I think, depending upon what is the results. I think India investment story is likely to continue, but a lot of it seems to have been factored in the prices at this point of time. Particularly if you look at capital goods and PSUs, which are the major beneficiaries of this, we feel that the next 3 to 4 years of growth in some of these companies are already factored. And many of these benefited, particularly in capital goods, from the margin perspective because of the commodity tailwind, which is now getting away. So we have to be very selective from here to be, say, overweight on this space. We have to be very much stock selective. On the other side, market is going to search for new winners. So in that attempt, I think there will always come a scenario where you will see IT sector, which has underperformed, getting some momentum for a short period, but it will all depend on how they can deliver on earnings, which is still a question mark given what is happening globally. And banks, again, an underperformed sector, will also try to see if there can be any winners there. So broadly, market is searching for some new winners post-election. I think this is what the market would be doing, and lack of triggers will keep the market in a very short band. Don't see downside risk and neither see upside risk for upside potential for Nifty. We remain a stock selective sort of an approach will work, and we continue to do that.
In terms of stock selection, Exide and Senco are two stocks that you're betting on. You've recently initiated coverage in two of your portfolios. Can you talk about the rationale behind Exide and even Senco Gold, why you picked these two?
Yeah, first on the energy, there is a large transition that is happening in two sectors, right? India's case is different from other countries, where we are seeing a demand for energy as well as transition to meet the clean energy target is also happening. While the demand for energy is covered from our capital goods allocation that we have in some of the companies, the mobility energy transition is a large opportunity is what we feel. Right now, we are talking about India's demand of around 20 gigawatt, including electric vehicles, battery storage, and all these areas. But this going up to as high as even 100 gigawatt, and government has committed that we will stay put with electric vehicle. And given the energy demand, there is also another leg of battery, lithium-ion battery demand coming from the battery storage as well. And we are also talking about power deficit scenario, which can also lead to some more higher demand. So overall, this put together, we feel India's battery, lithium-ion battery demand can go up substantially from the current levels over the next 5 years or so. And if you look at the company that you mentioned, has been always focused on the lead acid, is now getting into and starting to invest into the lithium-ion battery side. They have tied up with the Chinese manufacturer on this, and they've got some recent orders also from a domestic, the MNC company with the domestic manufacturing. So we feel a very big opportunity coming up in this space. We call it as an energy transition opportunity. And I think these are very good ideas that you can bet on from a little long-term perspective. So that is on the Exide that you talked about. Overall, we have been very bullish on retail, and within retail, gold is an area where we have made a lot of money over last 7-8 year time period by being in Titan. We feel that another idea in this space can also make a lot of sense. Given a year where people are looking for opportunities to balance the risk and move out of equities, a lot of interest is there in the gold. A rate cut scenario can actually lead gold to perform further. Within that, if you choose a retail gold company, a retailer who is in the gold jewelry business and who has a plan to expand its presence, then you make more returns than actually investing in the gold itself. That's the point that I keep making for so many years. That instead of investing in gold, if you had invested in Titan, you would have made almost 3-4 times higher returns. So I think that is, again, we are trying to expand it by one more idea, given that we have a positive view on gold as well as the retailing of gold.
So Madan, just allow me to come in over here. Just a curious question. Completely understand that narrative, and Titan has been such a wealth creator, right? And some of the other smaller jewelers, they've been reporting very strong growth as well. So my thought was that why Senco and say why not a Kalyan? Kalyan has also been reporting very strong numbers. So what are the metrics that are key to you, which is why obviously you've selected Senco?
Obviously, the growth numbers are very similar for most of these companies at this point because all of them are expanding at this point. Margin-wise, you don't see much difference between a Kalyan or a Senco or even to that extent some of the other retailers also. But if you look at Titan, it will be in a different zone. So Titan will always be our major allocation in terms of our allocation. A major allocation will be there in Titan. But if you look at Senco, valuation-wise, it gives you a lot of comfort when you are getting in at this point of time.
Got it.
So
got
that
it. Okay, so just very quickly, we're a little short on time. I want to squeeze in your thoughts on two more stocks, which really are very interesting in terms of recent additions. One is GE T&D. Now, we all know Q4 has been a bumper quarter for a lot of, especially MNC companies in the industrial segment, right? So just tell us what you're seeing in GE T&D and valuations over there. And the other interesting aspect is that you are, exiting MCX, but you're adding Angel One. Now, Angel One has already had a huge rally, and there's a debate about whether the pace of, new users, whether that is kind of, plateauing out or not. So just some thoughts there as well. These two stocks, GE T&D and Angel One.
First on the first question that was asked on Exide, I mentioned about the energy transition, right? That is India seeing. India seeing both energy demand as well as we are seeing a commitment to the clean energy, which will lead to investment per unit of energy being much higher than the previous cycle. To put it another way, as a country, we will burn coal in the evening to meet the peak demand. In the daytime, we will have solar energy. So the amount of investment required to meet the same amount of demand in the power sector will be much higher than what it was in the last cycle. Therefore, the megawatt capacity addition to meet the same energy demand is going to increase. The transmission requirement to get it to the consumer is also going to increase multifold. So this is going to be much different from the last power cycle that we have seen. Therefore, we see next 4-5 years a large demand coming for transmission capacity addition also. So that is the reason to have a GETD, and valuation-wise, these are not going to be cheap. But I think they will have a lot of early cycle benefit of getting a huge swing in order inflow for the next 2-3 years, given that what I mentioned, that there will be a large amount of capacity requirement to meet both the energy demand as well as the clean energy targets and commitments that we have as a country. This is on that. And Angel One is actually we have added in some of the small portfolios. This is primarily to de-risk from the benchmark perspective. But broadly, we feel that the small caps will still have some more legs to move up, and some of these stocks which can benefit from that and also available at low valuations is something which some allocation has been done. But that is in some of our smaller portfolios. But as you asked, GETD is something which we have added across portfolios as a long-term call that we have taken on that idea.
Thank you very much for joining in. Records are being piled on. The markets are rallying and rallying hard. It's now a 100-point rally on the Nifty. The Sensex has scaled up nearly 450 points. And look at the way L&T has moved up. L&T is now up close to about 1.5%. Axis Bank is seeing a big spike up, and IT continues to provide that support for the markets. Titan is another big mover. It's up close to about 0.5%, but most of the gains, it's been inching up as the days progress. So this is turning out to be not a quiet session anymore. It's rallying and rallying hard. The Nifty Bank too is up nearly 1%. With that, we're going to take your leave on Trading Hour from the entire team. Thank you for watching.